What are you expecting from bank earnings this morning and this quarter overall?
Hey, good morning, Brian. So I think it's going to be a strong quarter for the bank group. If you think about the three major drivers for bank profitability, large bank profitability, like capital markets, the lending businesses, and of course, credit quality and credit costs, it's really a nice set of tailwinds for banks right now. You've got a really strong capital markets environment, equity underwriting did well, M&A, et cetera. And then you have the lending businesses. We had a nice pickup in growth that the Fed has announced throughout the course of the fourth quarter. So that's a big positive. And credit costs still expected to remain very low, cycle lows, in fact. Unemployment is it's easy to find a job right now. When it's easy to find a job, you're paying your bills back. So the credit quality has been a real strong suit for banks. So I think it's a kind of a trifecta of good results for banks this quarter.
And do you believe that the move up in 10-year yields, it's obviously going to help them to a point, but has any help that higher yields and maybe the net interest margin increase, has that now already, Stephen, been priced in to these stocks?
Well, I think the Fed announcement on 3 potential Fed moves this year has probably been priced in. The yield and the margin improvement that we're likely to see will be gradual. Certainly not in the fourth quarter, probably not in the first. The earliest we expect the Fed to raise rates would be in March. So this is a latter half effect. So I wouldn't get too excited about the rate story just yet. Now, you also need to add loans on the balance sheet in order to take advantage of the higher interest rates. So again, not an immediate impact. So I think investors need to be a bit patient to see that improvement. But it's a nice tailwinds for banks at this point. It's a bit of a free ride, higher interest rates, and it will show up and meaningfully in operating results, we think, by the end of the year.
Very quickly, Stephen, 3 new nominations, the Federal Reserve, including CNBC contributor and our friend Sarah Bloom. Raskin, your take. Does that impact how you should look at some of the bank stocks, these names?
I believe it does. If there's one risk highlight I would mention, and it's not on the operational side, but it is on the regulatory side. There's a lot of pent-up regulatory momentum, I would say, against the banks right now. And the banks got kind of a pass in the first year of the new administration, but we did expect, bank analysts that is, did expect that there would be some more regulatory pressure, and I think the nominations that we're seeing so far certainly indicate that. It could be pressure on SPAC activity. It could be pressure on bank merger activity. It could be on capital ratios. So yeah, there's a fair number of risks on the regulatory side.